one. Okay.
All right, so welcome everybody. Welcome to how to trade using the Darkpool app. How many of you are beginner traders? Yeah, maybe you've only been trading for a year or so. Let me see how many. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. I'm going to stop counting, but I'm just going to let you guys. Yeah, a lot. 1.5 years. Okay, 5 years. Yeah, Mike wants to know if there's audio, so tell him. Okay, 60 years. Okay, so you are a beginner trader, GB? It takes you at least 75 to master this, okay? So you're almost there. Now, today I'm going to be teaching you how to use the Darkpool app, right? So this app, I did not develop it for beginner traders. No, but it's not for highly advanced traders either. But if you are an advanced trader, you're going to love it and you're going to pick it up much faster. I actually developed this app a few years back because I had a few traders that were in my room. I trained them, they knew what they were doing, but they couldn't be in my room anymore. One guy had to move from the West Coast to the East Coast. Another guy just wanted to play golf. And I got all these traders just saying, I wish you had a text messaging system. So when a big Darkpool print comes along, really, you would just text me. Let me know. Let me know when they're buying gold, when they're buying oil, when they're selling, or we're going to have a correction. Let me know. Can you just text me? And I'm like, no, I can't just text you. I'm busy. I'm trading. And I had so many people asking me for this that I started to think maybe I can develop an app, right? Why not? Everybody's doing apps. Oh, I didn't know the road to developing an app. It's not easy. If you've ever done one, it's kind of like building a house, right? They tell you it's going to cost $10,000 and in the end, oh, you want windows? Oh, you want a front door? Yeah, that's how it is when you develop an app. But I loved every moment of it, and we are still making updates. We got a new update coming very, very soon for it. We're just making it the best app possible. But I developed it really for traders that were already trained. But what happened next is that those people told other people about it, traders that weren't trained by me. And they started getting the app. And while they liked the app, they didn't know how to use it. I don't know how to trade this. What are you doing? How do I know when to buy? How do I know when to sell? So while I do numerous workshops on how to trade the Darkpool, I have many, many of them, I really wanted to do a free webinar to teach you the basics so you can get started. If you want to learn more, I'll share my site with you and you can take it as far as you want. I have downloadable workshops or I have all live 50-hour trading boot camp. To be honest, that's how I learned, by watching people trade live. So that's why I do a 50 hours of live trading class. Next one's in July, if you're interested. Now, before we begin, I have to tell you that the market is highly manipulated. Yes, it is. All right, that's your warning. It's highly manipulated, and it's being manipulated by the Darkpool. But don't worry. I'm going to teach you how to profit off that manipulation. This is my risk disclaimer. Please look it over carefully. This presentation is solely for educational purposes. Please paper trade until you have mastered trading. And there's one thing I've learned over the years, and that is the tape never lies. Maybe politicians, maybe your parents, your kids, your friends, but the tape never lies. You just have to stay on the right side of the tape. So the biggest trades out there are being done in an alternative exchange known as the Darkpool. The biggest institutions, Goldman Sachs, JP Morgan, Barclays, they do all of their big trades in the Darkpool. Why? Many reasons. Low commissions, better fills, and they don't have to report their trade for up to 3 hours after it's completed. So that if they have 3 million shares to sell of Microsoft, we're not going to see one single share being sold until it's completed, and then they have 3 hours. This is how they get away with buying everything at the bottom and selling everything at the top. So we have 3 big guys on one side of the trade. Everybody asks me, but don't you care who's on the other side of the trade, Stephanie? If somebody's buying, who's selling? Great question, okay? We have 3 big guys on one side: Goldman Sachs, JP Morgan, and Barclays. These guys always win. You don't ever want to trade against them. So who's on the other side? Well, he is, she is. We are. Well, not anymore, okay? That's my job, to make sure that you're on the same side as Goldman Sachs, because he is the biggest guy out there, right? So don't ever go against him. Stay on the right side. Become an ambulance chaser. That's really how I look at it when we're following these dark pool prints. We're an ambulance chaser, right? So we have 4 different types of dark pool prints. Now, prints is just a fancy word for trades that have already been executed. They're done. So the first type are the real-time prints. These are trades that just happened. They're fresh prints. But I want you to be careful of the fresh prints because they can splash. And I'm going to go into more details about that in just a minute, okay? But keep in mind, we know they're real-time trades because the price the stock is trading at is very close to the print. So the print happened at 23.48 and the stock is trading at, let's say, 23.51 or 23.46. It could have been done 3 hours ago, but it's still a real-time print as opposed to late buy prints. Right after Christmas, December 26th, we got massive amounts of late dark pool buy prints on the SPY. If you are following me, following the app, I showed you those. You can also go back with the app into the search bar and search back there, and you'll see my posts where I talk about massive late dark pool buy prints. These trades were not done today. They were done yesterday, and I'm going to show you what those late prints look like a little bit later. We also have late dark pool sell prints. This is how I've called every single correction. Same pattern. If you have my book, I hope you all do. If you don't, darkpoolsecrets.com. It's free. All you have to do is pay for delivery. I show you pictures of these prints, okay? Late sell prints. And I'll show you them in just a little bit as well. And they happened the day before because the price of the SPY is not trading at that price today. It's yesterday's price, and they come in all day long. So if the SPY is moving down, we keep getting these higher price block trades coming in. We had a massive level yesterday. 13.5 million came in. I put that in the whisper this morning. I have not seen a big level like that in a very long time, and we are below it, and that is bearish. As long as we stay below that level, all right? That level was 293.59. As long as we stay below that level, I'm going to be a bear. If we close above that level, guess what? I'm going to put on my bull suit, and I'm going to do a bull dance, and I'm going to go long. Have to just look at trading like that. These levels are so key. Bullish above, bearish below. Really, no thinking. However, we get splashed. Sometimes we find ourselves on the wrong side of the print, on the wrong side of the trade. So what do you do next? Okay? It's not a big deal, you guys. Who cares? It happens to me. I get in too early. I'm on the wrong side. I hightail out. I'll put a strangle on sometimes, which I'm going to go over in a minute. Or I get out and I go on the right side of the trade. Okay? It's healthy to take small losses in trading. It's my best trade of the day. If you're in my room, you'll see many times I'll post, hey, I lost 12 cents on this. Best trade this week. And people look at me like I'm nuts. What are you talking about? Yeah, I don't care if I made $5 on that other stock. I got out of this. This wasn't going my way, and I cut it loose. No ego, no none of that. Okay, trading is all mathematics. No greed, no fear, no emotions. I had traders that came into my room this morning emotional. Yeah, I hate that. We have to, no emotions, okay? Are we below the prints? Yes, so we're gonna stay bearish. Even if we have a couple of small rallies, it's healthy. We don't just go straight up. We don't just go straight down. As long as you're on the right side of the tape, stay in the trade, okay? The next type of dark pool prints that we have are, oops, sorry about that, market on close prints. Those huge trades at the end of the day, right at 4 o'clock Eastern. Ignore those. Now that's just institutions, okay? Institutions that need to get out at the end of the day. That does not give us any kind of a bias. All right, those we just ignore unless there's something really highly unusual, like this stock doesn't normally have a big, huge print at the end of the day, and it does today. We had that on the dollar recently. It was selling on a UUP, and we don't normally get that, and we did get one, and I said, okay, now I'm going to pay attention only because we never get one. Now, I've been doing this for 25 years, really long time, and this is all I've been doing in my life. So I'm a pretty big expert when it comes to seeing something that's unusual. It won't take you long. In fact, a lot of traders come into my room and after 3 months, they're calling out unusual stuff. So you'll notice that I call out different descriptive words when I'm talking about a print, right? So I have 3 very popular questions that I get asked. The first one is, what is the difference between unusual, big, large, very big, and massive in the posts? What's the splash? How can I trade it? And when should I put a strangle trade on? So we're going to cover those right off the bat. So the first one, what's the difference between unusual, big, large, very big, and massive? There is differences. So unusual. This means we rarely see a print on this stock. In fact, we had some today, yeah, on IVV. If you notice on the post I did today, unusual. That's an S&P 500 ETF. And the fact that we had 2 very big 500,000 share prints is unusual, and we want to pay attention. Something unusual is going on. They're kind of being sneaky. Sometimes when they pick different ETFs to unload or buy, they'll pick these, but we never miss anything because we have the block trade indicator, and that scans the entire market of all these big trades. And I've learned about so many ETFs that I never even knew about, only because I have it. And it's Charles Schwab Street Smart Edge platform. So what does big mean? Big. It means we've seen prints like this before on this stock or ETF, but it's still worthy of taking notice. I don't post about every single print because we get so many every day. That would be really boring for you if you just kept getting push and annoying. If you kept getting push notifications every 5 seconds. So what I do is I watch, and I know EEM has million share prints on it all the time. So I'm not going to post that. But if we get a 2 million, 5 million, I'm going to let you know, right? So if I put big, it means we've seen prints like this, but you definitely want to take notice of this. Very big means we don't normally see prints this big. So definitely pay attention to this notification. A big move is going to happen. Massive. I have traders in my room that only pay attention to my massive posts. Okay. You must pay attention to this. Okay. A very big move is coming. Do you remember in April when I posted massive prints on IAU? A massive move is coming. Be patient. It could take a while. The dark pool is not going to move something until they're done entering. Keep that in mind. If it hasn't moved, I know Dorothy asked me a question. Where is that? I don't know if she's here today about that. What do you do if it doesn't move, right? They're not going to move it until, yeah, Dorothy R. Is she here today? Yeah, they're not going to move it. Oh, hey there, Dorothy. Yeah, they're not going to move it, okay, until they're done entering. Now, this is where experience comes in, and we've seen it with gold a while back, and we got frustrated. We all got into our option positions, and they didn't move it, and our options decayed, and we were like, okay, we lost money. We were too early. So it happens. I wish I could give you the magic strike, the magic expiration day. The further out you go, the better your odds. So when trading options, okay, go out 4 weeks. When I say massive, go out 4 weeks because it's going to be a massive move, and it may not move that week or even the next week. But within 4 weeks, it should start. Have there been occasions where it took a little bit longer? Yes, but if I have to say 90% move within 4 weeks, okay? So keep that in mind. Gold was the best trade of the year. I don't think it's done yet, okay? I've seen this in 2016. On IAU, we had about 20 million in prints. In November, no, not November, 2016, January, February, right? Go back in your chart and look at the move that GDX made from 15 to 32. That was on 20 million. We recently had 100 million on IAU. Okay, so do the math, figure it out. We could have a much higher move. We're taking a little bit of a breather right now. I'm waiting for that 1420 level on the gold futures to break above. We still didn't hit 1450 yet. That's also a really key level. And I'm waiting to see what prints come in. I did not see any selling yet on actually, there's one little print that came in on IAU. Not very small, nothing big. Yeah, we'll see them selling when they're done. Okay. So time frame for large. Again, it depends on the stock. And it depends on the, yeah, it just depends on the stock. They're all different. You can figure out what's the volume of the stock and how big is this print. So it varies and it depends on the daily chart. And I'm going to show you that in a little bit, okay? This is where experience, and again, this is also why I do run a live trading room. I trade live, I call out all my trades, and I teach while I'm trading. I think that's really the best way to learn how to do anything live. Okay, so let's go to the real-time prints. Okay, real-time dark pool prints. So Stephen has a question. I'm going to answer that right now. Okay, about strangles. Okay, so real-time dark pool prints. What happens to these? They splash. They create a splash. Now the splash is usually in the opposite direction of the true move. So if they're buying, they'll usually splash it down first and then move it up. If they're selling, and I say usually, I want to say 90% of the time, it's not 100 because I've seen them just go, but 90% of the time, it splashes up before it moves down or down before it moves up. And this goes back to the days when there were humans on the floor of the New York Stock Exchange. Yes, there were actually live human beings on the floor. Do you remember these guys? What do you call this guy? Anybody remember? And what is he holding in his hand? It's a specialist. That's right. What kind of phone is that? So every pit on the floor would have a specialist. Okay, the splash goes back to the specialist days. So the specialist would get a call from Goldman Sachs that he wanted to buy 13 million shares of TLT. That's a bond ETF at $122.98. But he didn't want to pay a penny more than that. Make it happen. Okay, that's pretty much how it went down. Specialist sees all these people, crowd of people in his pit. Okay? How is he going to get these people to sell TLT so that he can buy 13 million shares for Goldman at 122.98? It's going to push the stock up. If people know Goldman wants to buy 13 million, they're all going to jump in before Goldman can get done. Okay. So now they do it in the dark pool, but back then he'd have to call the specialist and get his order done. There still was the dark pool back then, but still, this is really how they did most of their orders. So the specialist is going to make it look like the price is going down, like there's a big sell order. Sometimes they plant people in the crowd. You didn't hear that from me, but I've spoken to a few specialists, and they pretend a big sell order is coming in, and everybody starts to sell their stock to the specialist. He's got to take the other side of the trade, but he's making it look like he's sweating while he's taking the trade, okay? And he's buying it up and buying it, really buying it down, all the way down to 122, 121. And he's so happy because he knows Goldman wants to buy it at 122.98. He's going to make a lot of money on this trade, okay? This is the splash. They knock the price down. He makes money, Goldman gets in at a really nice price, and then it goes up. So this still goes on, except it's all computerized. So what do we do when we get these big prints and we don't know the direction? It's called a strangle. Let me ask a question in the room here. How many of you don't know how to trade options? Let me just see how many people there are. Don't. 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay, 10, 11, 12. Still learning. Now, there's quite a few people here that don't, or basic puts and calls. Yeah, that's kind of me, Magoo. I've only been doing options for 3 years. Can you believe that? I can't even believe that. I've been a stock trader for 25 years, but the last 3 years, I finally made the switch. I wish I would have done it 25 years ago. But you really have to know and learn how to trade stocks first. That's the key. That is definitely the secret. If you don't know how to trade stocks, when to get in, when to get out, directional options is going to be very, very hard. Options are hard enough as it is, but if you don't know how to trade, yeah, definitely much harder. I don't do anything complicated. I use them as a vehicle. But when I don't know the direction, and I have a big print, and if I'm impatient, you can wait for the splash, or you can jump in and put a strangle. Now, it's been the year of the strangle. The market's been so crazy, volatile, and amazing that both sides of our strangles have actually made money more than once. Insane. I had Bank of America, American Airlines, a few times American Airlines. I don't know, that thing has big splashes, enough to make money on both sides of a strangle. Crazy. You don't do it to make money on both sides. What a strangle is really, and this is a long strangle, not that kind of strangle, by the way, this kind, this kind of strangle. What you do is you're buying out of the money calls, you're going long out of the money. It could be $1 out of the money. It could be $2, $5. If you're trading Apple, it's going to be $5 out of the money. If you're trading something like GDX, which is much cheaper, it could be $1 out of the money, even 50 cents. I've strangled 50 cents out of the money. But if it's massive, massive, massive prints, you should go further out at first. Out of the money calls and out of the money long puts. You're buying puts out of the money, buying calls out of the money. And they are super cheap. Super cheap. You know why? Because number one, they're out of the money. And I go out like 4 weeks. And they're super cheap because the option chain is not expecting a big move. They have no idea. People ask me, do I follow unusual options activity? Absolutely not. Okay, because if I did that, they're already inflated. People have been buying these options, pushing it up. I want to buy options when they're dirt cheap and nobody sees a big move coming, like I did with gold. Nobody saw it. Okay? The options were dirt cheap. You're risking peanuts on the first trade. We have unlimited profit when we're doing a long strangle. If the stock keeps going up, your calls keep making money. There's no cap. Your puts will lose, but who cares? If you make 500% ROI on your calls and you lose 100% on your puts, you're still up 400%. The key to doing a strangle, the reason we're putting it on is because we're impatient, but we know a big move is going to happen, and we are going to have enteritis if we wake up in the morning and the stock is gapped up or gapped down. How are you going to feel? I know I'm going to have enteritis. I'm going to be, yeah, and it's hard to chase once something gaps. So that's why I put it on, and I go small. And I always feel like I go out on the outer rim. So let's say the price of the print of the trade is $23. I'll buy 25 calls and 20 puts going out 4 weeks. Once the stock starts to move, that's when I kind of put my day trading short-term swing hat on. And then I start doing this week's options. If it's Monday, I'll do Friday's options. If it's Tuesday, I'll do Friday's options. If it's Wednesday and there's no resistance ahead, I may do Friday's options. But if there is, I'll go to next week. If it's Thursday, Friday, I'll go to next week. All right, that's generally how I do it. Depends on the ATR of the stock as well. How much does that stock move from low to high every day? You know, if it's like Facebook, it could move $5 in one day, no problem. You don't have to go far out, and I call them lottery ticket trades. Really, all my trades are lottery ticket trades. Why do I call them lottery ticket trades? Because I am not paying a lot of money for them. My options are dirt cheap. I love to buy them for 10 cents. I bought those TZA 10 calls 2 days ago for 8 cents and sold them for 16 cents yesterday if you're in my room. So I buy them for 20 cents, sell them for 40. As soon as they reach 40, 50, 60 cents, they're too expensive. I'll sell them, and if I still like the trade, I'll roll my option to the next highest strike. So I can buy them again for 20 cents. This way I'm taking my money off the table, and I'm still in the trade avoiding exititis. That's really, really key, rolling. I do this every single day. It just keeps me emotionally stable. That's the most important part of trading, is keeping your emotions out. No enteritis, no exititis. With gold, we just kept rolling. GDX calls, 50 cents out of the money. As soon as we hit 24, I bought the 24.50s. As soon as we hit 24.50, I bought the 25. As soon as we hit that, bought the 25.50s, 26. Just kept going until the last one doesn't work out, which I think might be this week. Unless we get a massive gold rally, I may lose on these last calls that I bought, happily. Okay, so that's generally how I use options. So let me show you this TLT trade that we had. Bonds, we've been killing it with bonds and gold. This was the first I've ever seen them both go up at the same time, and I don't even know how long, forever. On April 17th, we got this massive print, 1.2 million at 122.37. The next day, though, I've never seen prints this big ever on TLT. We got a 7 million print. That's at 2 o'clock Eastern. 2 o'clock. This is when these prints came in, right in the middle of the day. 122.98. That's massive, massive print. See what I posted on the darkpool app? Okay, when I put massive, okay, and then 2 exclamations the next day, and I put good strangle candidate, go out a few weeks. Try to give you a heads up. So here's a chart of what it looked like, because let's just, hindsight is great, right? I wish I would have bought 1,000 contracts going long. We've all said that. People in my room every day, I shouldn't have sold it. I should have bought it. let's not trade hindsight. This is what it looked like that day. Look at the last bar on the 18th. High volume. I don't know. Does that look like buying or selling to you? It came back up to the 8 EMA and it stopped there, that black line. I'm going to teach you about that in just a minute. That's resistance. But once we can close above that, then it's support and it's bullish. So what I did in the room on the 18th, I didn't want to wait. April 18th, there's my post, 11:24. It's really 2:24 because that's Vegas time. All my posts are in Pacific time. So the print happened at 2 o'clock and 24 minutes later, I couldn't wait any longer. 24 minutes later, I put the strangle on. I bought the 125 calls and the 121 puts. Okay, the print happened at, let's just say 123 because it was 122.98, right? 123. So I went $2 out of the money on the calls and $2 out of the money on the puts, right? Okay, so hold on a minute. So here, 125 and 121, really far out, okay? And I'm giving it time. We're at April 18th. So right now I have until May 3rd. That's quite a few weeks, about 3 weeks, I think, right? Okay, so initial. Here you can see the volume, really, really high. And I'm happy I can go to sleep at night and not worry if it gaps up or gaps down. But what did it do next? It splashed. You can see the next day, it splashed down, right? Remember, they move it down before they move it up. Now, I was worried that I wasn't going to have enough time. So I went out and put on a second strangle with more time. And that's my post on futures, by the way. I was teaching boot camp in the other room. And whenever I teach boot camp, I log into the Java Pit as futures because I share the futures screen, which I'm going to show you a little bit later. Okay, so I wanted to buy more time on the 22nd. I kind of got nervous going, oh, this could be the splash. And I don't know how long the splash is going to be. We could have went down to 121 first before we moved up, or this was it, which it was. Each one is different. I wish that I could tell you the magic number, but it's different. But that's when I added on giving it more time. I always give reasons why I enter and exit every trade I do, because I really want you to learn. I just don't want you copying in my room. I want you to learn so that you can call out good things. And also, if I'm not there, I do like to go on vacation every once in a while. Not too often though, but when I do, my traders know what to do. So you can see on April 24th, you see when it started to move up above this 8 EMA, okay? When it starts to move up, that's when you want to add to your calls, okay? Right then and there, because that is the splash. Now, I'm not going to show you this entire trade. We don't have time, but I do have it in the workshop I just did. Dark pool Fibonacci fusion. I walk you through the entire trade, how I added, how I scaled in, scaled out, and then I even took a reversal trade at one point, a retracement trade, which I'm going to go over retracements in a little bit, and so forth. But I just wanted to show you the splash, how to put a strangle on, and how to know when to add. When we came back and tested 122.98 and we broke above it, that's when you go long. So if you didn't put the strangle on and you were patient, I'm not going to put anything on, I'm going to wait. That's when you want to go in on the long side. Worst case scenario, you lose a very little bit of money, okay? If you're on the wrong side, but never add to the wrong side, ever. That's my #1 rule. Every trader I've known, and I've known a lot in my lifetime, that's ever been wiped out, you know what they did? They added to a bad trade, a trade that was in the wrong direction. It's ego, complete 100% ego. They didn't want to lose on a trade, and we can't think of it that way, okay? We have trades that don't work out. So somebody said, yeah, show me a trade that doesn't. Any trade that doesn't work out, which I might have today. So I bought these 15 calls. I always have them every week, but they're not big losses. I bought OIH calls for 8 cents. They expire. The 15 calls expire on Friday. And I really thought I was going to lose all 8 cents on them, but we just popped up today. We're at $14.75. So I might break even. I might lose if they expire. I'll have to see how they close today. Yeah, sometimes I get out as best as I can, and I don't have enough time, okay? All right, so, yeah, what are your commissions? Chugger's saying, what size are you trading at 8 cents? So my question to you, Chugger, is how much money are you paying in commissions? Because you seem worried. Whenever somebody asks me questions like that, it usually means their commissions are too high. So I use Tastyworks, and guess what? There is no commissions on exits. I can scale out one contract at a time. I don't pay any more in commissions, okay? Tom doesn't pay me anything to say that. I love him. I mean, when I found out about this, I almost fell off my chair because we scale out of so many things. How much money you pay in commissions scaling out? The platform is not good. The software itself, the charts, I don't use it for that. I strictly use it just for trading, okay? So switch. If you're worried about your commissions. So my question to you is, are you a day trader or a swing trader? Okay, are you a day trader or a swing trader? Go ahead and put it into the chat. Day, swing, both. Just want to see who's here. Swing, 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 both, swing, both. A lot of swingers in the room. All right, who here likes to swing over the weekends? People ask me that. That's kind of personal, right? I'm kidding. We have a good time. People are honestly scared to swing over the weekends because there's 2 extra days that something really bad could happen. And I'm always hedged. As a swing trader, I always have very cheap protection put on all the time. But especially last night, which I posted because we had the biggest dark pool prints that we are still below. So I have to put on cheap protection. Yeah, I buy SPY puts. That's how I hedge a lot of times. I love these SPY. I didn't do them overnight though. No, I day traded them yesterday. I bought those 290s for like 60 cents, sold them for $1.15 on that move down. But I didn't want to hold puts that were $1.15 overnight. For me, that's too much. Personally, may not for you, but I don't like to. I only like to risk 30 cents if I can overnight. So I bought really cheap DIA puts. I took money that I made and threw it into that expiring Friday. I also have been playing the TZA calls. Again, 8 cents they cost me. I sold them for 16 yesterday, and then I bought 1050s that were 5 cents. So again, it doesn't matter what you do as long as you do what's comfortable for you. All right. And I will add on, I just don't want you being all long and not one thing hedged. You don't have to hedge your actual position. So if you're long Microsoft, you don't have to buy puts on Microsoft. But the SPY weeklies are phenomenal. You have Monday, Wednesday, Friday expiration. You can buy really cheap puts, further out of the money. Don't go too crazy out, and it depends. And these are things that I teach you in the room and in my workshop. So anyway, are you a day trader, swing trader? This matters, you guys. People ask me all the time, how do I trade this post? Okay, so if you're a day trader, you have a different set of rules. I do both, but I am definitely more of a swing trader. I will day trade. I day traded yesterday. I'll day trade when the market's having nice moves, but I'm definitely more of a swing trader. So there are rules. The best time to day trade is 9:45 Eastern till 11. The first 10 to 15 minutes is the shakeout period. Okay, shakeout period. I have a question from Dorothy. Is your definition of protection to buy SPY puts? It doesn't have to be SPY puts. As long as you have something that short in your portfolio at all times to swing overnight. Now, if you don't have any long positions, you have nothing to protect. But if you are heavy on longs, you got to have something. It could be a stock that's short. Yeah, I learned this my first day, 1994. Okay, my boss, Scotty, had a list of longs and shorts, and he said, you must have something on both sides. We don't know if a tsunami is going to hit. We don't know if there's going to be an act of terror. We don't know what's going to happen overnight. I like SPY puts because, again, I can buy them really cheap out of the money just to have something on. It's wealth insurance. I don't care if they go to zero. I don't care if my DIA puts go to zero on Friday. I'm protected just in case. Now, I do add during the day. I will add at night if we close weak, still below prints. Yep, I'll become heavier. But you just must have something on if you're a swing trader. I have seen traders that were trading on margin, swinging overnight, get completely wiped out. 9/11, there's an example. The market closed for a couple days, and those guys on margin were done all long. Okay, so very, very important. And again, if you really want more education, you email me, and I'll help you out with what you can take. I do, again, live trading is the best. But you can email me, Stephanie@thestockwhisperer.com. I don't want to go into that too much. But day trading entries, 9:45 to 11. What happens after 11 is these guys come in. The minions. They're like Goldman Sachs' assistants. And they get paid to stop you out. That's their job. The Armani suits go to lunch. They leave these guys in charge, and they get bonuses for every stop they make. All right, they take it up a little bit, they take it down a little bit. They take it up, it's very, very choppy. So don't trade against these guys. Wait for the Armanis to come back after lunch. Swing trading, 3:35 Eastern Standard Time. Why 3:35? I used to get in at 3:30. And I get shaken out. There'd be like that last move, 3:35 to 3:45 or 3:45 to 4 p.m. It's best to wait until the last 5 minutes. You want to make sure your stock closes strong if you're going long. You don't want a big wick at the top. Sellers coming in at the end of the day causing an upthrust. Okay, if you're going short, you don't want a big wick at the bottom. Buyers coming in at the end of the day. You want to make sure the volume is above average or higher than yesterday's if you're going long or short. You want to make sure that there's interest coming in. Really, really important rules. A lot of people will take a swing trade in the morning, and what does it turn into? A bad day trade. Wait, sometimes I'll dip a toe in. And I'm going to tell you, 3 out of 4 times that I dip a toe in, it doesn't work out. 1 time out of 4, I'm like, oh, I got in early. 3 out of 4, I'm going to tell you I should have waited. So I really try hard to wait, unless there's a big print involved. Okay, I break every single one of my rules if there's a big print. But again, we could have splashes, right? So day trading the splash is phenomenal. But just know when you're doing that, you see a big print, it goes above it, you go long. Just know, hey, this is most likely the splash. So I'm not going to stay in this for a long time. I'm going to day trade this. But if it comes back down to the print and it goes below, you go short. Okay? That's the trade. So that's really the secret to those splashes. Now, we've had splashes for numerous days. We had a splash on Bank of America last November, not this November, last November. That lasted, I want to say 10 days. It hit both my strangle. I had the 30 calls and the 25 puts. I'll never forget this. And it went to 29, and I made ridiculous money on the way up. And I thought, okay, well, that's great. My puts will lose. And then all of a sudden it reversed and came crashing down. And of course, we added to the puts, added to the puts, added. And I even made money on my initial strangle. That happens. It's kind of rare, but it was a 10 million print. It was something really, really, really big. And it caused a ginormous splash. Usually the splash is a couple days Depends. Yeah. So a straddle is a different strategy. I don't do straddles. They cost more money and you're capped. Okay. I don't like to be capped on how much I can earn as well. But you can. There's a lot of traders in my room that do them. I prefer the strangle. I'm more of a directional trader. So I'm using options just as a vehicle, but I just will put the strangle on when I'm unsure of direction at first. Okay, so levels. Let's talk about levels. If I don't answer your question during this webinar and I miss it because I'm not watching the entire time, just email me. I'd be happy to answer it if I don't answer it before I'm finished. Okay? Yeah. So let's talk about levels. So levels. Yeah, this is huge. We're trading against computers. And if you read my book, I talk about that and I talk about these levels. For those of you that haven't, I'm going to go over that right now. As a swing trader, I like to swing off the strongest levels possible. We have 50 cents, the half dollars, the dollar, $1.25, $2, $2.50, and $5 increments. When I started in the 90s, we were trading in fractions, eighths, quarters, sixteenths. We call them teenies. I remember we had that uptick rule and you couldn't short a stock unless the last tick was up. It was my job to artificially uptick the stock with a 16th on the bid. I was in front of an internet machine and all I did was go above the bid by a 16th, put an order in there, and my boss shorted it. Little tricks, crazy. I don't know if you guys were around then, but yeah, those are crazy times. So I'm going to show you that, John. Okay, so levels. The 50 cent, and we're still using fractions. As a day trader, I scalp 10 cents in between the eighths, 0.125 levels. And as a swing trader or entering a day trade, the highest probability of making 20 cents on a day trade is off of a major level. 50-cent increments and the dollar increments. Now, when I talk about these levels, just to give you a little example, on the left side, like the $5 and the $2.50, and I'll show you that in a minute. So 15, 20, 25, 30. Computers are loaded to buy and sell their most shares at those levels. You can see it on an ECN book. The next are the $2.50 increments, 15, 17, 50, 20. The next are the $2 increments, right? The dollars, the 50 cents, okay, and the eighths. So here's an example. Buying GDX at $25 and a penny. You don't want to buy it at 25. You want the 25 on the bid. Support. If the 25 is on the offer, it's resistance. They're selling there. Once he moves to the bid, you want to buy it at 25.01. Now, I like to scale out going up, but my last target is 25.49. I get out before 50 cents. Yeah, I always like to say I get out before Goldman. Okay? But I'll scale out at 25.20, 25.37, and then 25.49. I like to scale out on the eighths. The first 20 cents, number one. So many times you'll see stocks go to 25.20 and then come all the way back to 25 again. When I first started learning how to day trade, or wanted to be a day trader after years of swing trading, I still had my swing trading hat on. So I would get in at 25.01, see it go to 25.20 and come all the way back down because I was going for 25.50, right? 25.49. I saw that happen so many times. I said, what am I, crazy? Why am I not grabbing these 20 cents off the table? I must have seen like 6 of them. I didn't grab them. I was greedy. I wasn't greedy. My expectations were too high. So it'll go to 25.20 and come back down, and then it'll go back up again if it's strong. If you missed it, you can enter at 25.21. That's my next entry level, and then go up to 25.49. Once it hits 25.50, sellers are there. Even if it goes to 25.55, don't say, oh, they broke above that 50 level. No, no, no. It's usually they're selling a little bit higher. They're going to move it back down again. 25 minutes later, if it can break above 25.50, that's my second test rule. Volume increasing on a 5-minute chart. That's when I enter the next trade. 25.51. So I actually took this trade yesterday, going down to 25.51, and then I sold it at 90 cents. If you're in my room, but I did options. I used options as a vehicle, but still, I took it down to the 51. But in this case, right, entering at 51 and then selling it at, I put 99 cents. But what happens is the last eighth is the most important, expensive eighth in the entire world. Did you read Reminiscence of a Stock Operator by Edwin Lefebvre? Originally published in 1923, you guys. Best book in the entire world for trading. It's my Bible. Reminiscence of a Stock Operator. It's a story of Jesse Livermore. It's all about tape reading. And he used to go into these bucket shops and he could read the tape. And he used to get kicked out because he could read the tape. They had his picture on the wall. I mean, it was crazy. Can you imagine if Tastyworks called you up and said, you know, you're doing too good. You can't trade here anymore. And they kicked you out. That's what happened to Jesse. So in the book, one of my favorite quotes he says is, the last eighth is the most expensive eighth in the entire world. So give it up. Stop trying to get it. And what he means is, GDX is going to go up to $25.87. And then it's going to pull down again. Usually to around 60 cents is what I've looked at. And then it's going to rev up its engines and go to 26. So I like to get out just shy. That's why I got out around 90 cents. So when I was trading in fractions, on the bid was $25.78, and on the offer was 26. So whenever I was selling my stock, I was really selling it that last eighth on the bid. And it makes a lot of sense, and I'm sure you guys have seen it quite a few times. Reminiscence of a Stock Operator. Thank you, Julio. Okay, so really, really key. Little things like this makes a huge, huge difference. Life-changing, little tiny things like levels that we enter, volume times that we enter. Okay, not trading with the minions. Do I break the rules over again? Yes, but every time I do, it doesn't usually work out well. Okay, sometimes I might, but I really, really try hard not to. Okay, we're human. Okay, so tips and strategies. This is another big tip and strategy for you guys. How to trade around the 8 EMA and retracements. Trading the whispers versus new push notifications. How you can use futures to trade the dark pool. I will be covering all of this. But let's start with some insights. Yeah, every weekend I put out a video called Dark Pool Insights. It's an educational video. And this was one I did last week. Retracements. How do we trade these? I use moving averages that many of you are aware of. The 4 EMA, the 8 EMA, and the 15 exponential moving average. Why do I use exponentials? Well, the simple moving average is the average price of a security over a specific time. It's average. The exponential moving average provides more weight to the most recent prices in an attempt to better reflect new market data. As a short-term trader, I really want to use the exponential moving averages because it's giving me more weight to the recent price action. So let's start with the 8 EMA. So bullish above, bearish below. The trend is your friend. Okay, this is my trend moving average. Rick Sadler coined it the 8 exponential moving average. He coined it the T line. I call it the 8 train. Okay, when a stock moves above it, and this is on a daily chart, not a 5-minute. Please don't use it on a 5-minute. Daily chart. That's my secret. I always look at a daily chart. Okay, for day trading. I know it's crazy. It works really well. If the gravitational pull is to the upside on a daily chart, what do you think is going to happen to your day trades? They're going to work out really good going long. If it's above the 8, if it's below the 8 EMA, guess what? Your short trades are going to have a gravitational pull to the short side. So you want to definitely stick with that. Really, really key. I have another moving average called a 4 exponential moving average. And this is the express train. When stocks are moving really, really fast, high speed momentum, a lot of times after earnings, they'll move on a 4 EMA. So it has a higher velocity and a stronger momentum than the 8. I'm going to show you a recent chart of the SPY to show you retracements. So the 8 EMA is in black and the 4 is in pink. Okay, so we are bearish below. You see on the 13th of May, that red candle, and I'll just circle it right here. The further away we are from the 4 and the 8, the more the stock wants to go back up there and retrace. So that's why you'll see in my daily whispers that I have retracement next to that word. It doesn't mean I'm bullish. If I say bullish above this, but retracement, it means I'm only bullish until it hits this brick wall, okay? It's got to break above that for me to turn bullish. And then we moved down, and then we came back up. And then we moved down, and we retraced. Then we moved down, we retraced, moved down, and now we went bullish above strong. Now I want you to notice on this candle over here, do you see this wick on top? I know it's kind of light green wick. That's selling that came in at the end of the day. We don't want to go long when you see a wick at the top. That's the only thing you need to know about candles, really. Best thing I ever learned is just the wick. So bullish above, and then we retraced. We went far away, and then we retraced to the 4. We're riding on the 4 EMA, and then we went, okay, and then we retraced. As an overnight momentum swing trader, I enter stocks at the end of the day, and I make sure when I'm going long, it's above the 8 EMA, closing strong with above average volume. And I don't want the big wick at the top, but here's the trick. The further away it is from the 8 or the 4 EMA, the higher the risk that it may retrace the next day. So your best swings are ones where it's the first day up or just retraced and now it's moving back up again and volume's kicking in. Okay, keep that in mind. The further away you are, now, every time I teach my boot camp swing class, I tell my traders this, but I'm going to tell you they have to experience pain in order to follow this rule. And we paper trade at first, so they can at least experience paper pain. It still hurts. Doesn't matter if it's real or not. You still don't want to see your stock against you the next day. And I let them enter. I know it's too far. I say, hey, it's too far, but why don't you go and see how that works out? Well, the next day, it retraces back down there. And they're like, I am never doing that again. They have to experience it, okay, before they really follow it and experience it. So I'm telling you that, but paper trade, experience it. Once you see that it goes back down to it and bounces off of it, you'll say, you know what, I'm not going to swing it overnight. I'm going to wait for the retracement, and then I'm going to take it long tomorrow. Now, if you really are gung-ho, like with gold, like we knew it wasn't going to let anybody into the trade. We were buying out of the money calls for pennies. And again, if it retraced, then we lost on the trade. It's not a big deal. But that was a very special circumstance because we had the biggest prints I've ever seen. And again, I've seen it before where they just gap and go, gap and go, gap and go. That's highly unusual. It doesn't normally happen that way. Okay, so just want to let you know that as well. So we're going to go over retracements. So in this Whisper of the Day video that I did for you guys, June 11th, if you recall, not too long ago, I had a lot of retracements. So I'm going to show you how this works. So the SPY, we were bearish below 290 on June 11th. And you see the next day what it did? It came back down to the 4 EMA in pink. Bam, and bounced. And there it is on a 15-minute chart, the SPY. That's how I'm getting my levels. So now you guys will know how I get the levels. So here's the next trade on QQQ, retracement trade. I was bearish below 183.37. All right, and mind you, we opened up top and then we went down and we hit that 4 the next day. But we went down that day. There's a 15-minute. Here's one on AMD. It took a few days, 2 days to come down to the 8, but there was that retracement trade. Here's Beyond, bearish below 150, and we came all the way back down again, right? There's the wick at the top. Sellers came in, and then we have a retracement trade. If we have a big sell print, that's a million times better when we take a trade as well, as far as a retracement. I'll go against the trend a lot more easily for if we have a print. And you can see we went down. Here's Apple that day. Apple went sideways. Indecision doji candles, but you can see pretty big wicks at the top until it finally went down to the 8. Facebook, another retracement, went down. Here's another one, FCX. So this is one where a lot of my traders and I were long FCX, and we used the gap up that day to sell at 11 when it gapped up to 11. So I wrote on June 5th, very big prints on FCX at 993, large. I love trading FCX. It trades so well, level to level. And so this is a retracement. Now, if you weren't long, you could have taken it short as a retracement. I did not. Instead, there's Paul. He's in my room. He got out of 3/4, 11 calls we had. Blanca got out, Laura. I got out of my calls. So we used it in that way. And then we actually bought more on the retracement, and we had another good trade up, but I just don't have time to show you everything. EWZ, another retracement. Just want to kind of show you this pattern and what it means. So next I want to teach you, okay, next I want to teach you about the trend trade. The 15 EMA. So when stocks come out with earnings, we don't know, is it going to be a pop and pop, which means a gap and go? It's going to gap up and continue going up, or is it going to be a pop and drop? So Lululemon had amazing earnings. Yeah, really good earnings. The company boosted its outlook for the fiscal year. Revenue, earnings. How many of you read this stuff? Their price target was raised by many analysts. Let's not use this to trade the stock, okay? I never ever look at any of that. I just look at the price action in the morning and find you the best level. So I'm going to show you how I kind of used everything I just taught you to map out this trade for you in the Whisper. So Lululemon went up the night before. Amazing earnings, okay? Now the 15 EMA on a 5-minute chart. Okay, this is when I use a 5-minute chart. The 15 EMA is in lime green. After the first 15 minutes, if a stock can't stay above that 15 EMA, like you see here, here it was above it, And then as soon as the bell rang, it went below it. It came back to test it and went below. That's bearish. All right, that's going to be a pop and drop. But if it would have stayed above, or would have went above and then came down, retested it, and went, yep, that's going to be strong, gap and go. But that's a pop and drop scenario. Now on the Whisper, I was bullish above 180. Why? Can anybody tell me why I used 180? Round number, it's the $5 increment. Catherine got it. She's in my room. Yeah, who here is in the room? We have a lot of people from my trading room in here. It's the $5 increment level. Okay, that's why I used it. It's so powerful. After 15 minutes, if it could stay above a $5 level, the computers are not selling, but they were. And I was bearish below 177.50. Why did I pick that level? I picked that level because it was $2.50 increments. Okay, that's why I picked these levels. And here's the Whisper that I did for Lulu. And you can see bullish above 180, bearish below 177.50. There's a retracement trade right down to the 8. Bam. See, that's so cool. And then a bounce. It's like a brick wall of support when it's above it, and it's a brick wall of resistance when it's below it. And again, we're talking about the daily chart. I only use that 15 EMA on a 5-minute chart, the first 15 minutes. Or if I'm in a stock that gaps up for any reason, I use it to scale out. I like to take profit immediately on half my position, and then I use another half or a quarter using the 15 EMA, and then I use the last quarter for major levels or so forth. Or now I get out and I scale and I just roll into the next option a lot of times. But when I was just a stock trader, I used to do that. So here's another example in RH. It also had earnings, and I used that 115 level, okay, and the 15 EMA, bearish below 115, and you can see it couldn't break above the 15 EMA, and it couldn't stay above that 115. So, you know, little things that mean so much. So does every gap get filled? No. Some gaps never get filled, so don't try to fill them. Sometimes they may get filled 1 week later, a month, a year, but sometimes they never get filled, especially when stocks gap down. These companies could be headed for bankruptcy. Okay, so don't try to go filling in gaps. The best is the gap fake out trade, which many of you know about that. Take it to the strongest level before the gap. Get out, and then they pull it back so severely. I learned the hard way a long time ago. I kept trying to fill gaps in. And when I saw them take it so close, pull it back, and then take it up and fill it. So keep that in mind also. Great. I love trading it to the gap. So when is the best time to enter a swing trade after a retracement? I'm going to show you. We want to go long with the trend after it retraces. I'm going to show you on GDX. Here's a recent example of a trade I took. You can see on the top is a daily chart. So it was riding on the 4 train, the pink moving average, and then it came down to the 8, and it pushed right off of it. You see that? Ah, I love that. It came down, and then right at the end of the day, didn't I tell you the best time to enter is at the end of the day, right? Last 25 minutes and major levels. As soon as it broke above 22.50, that 50-cent increment level, okay? I entered. I just used all of the rules I showed you. And I bought the 23 calls this week, and I wrote lotto. I forgot the 0 there. from my room. It's really 3:33. I actually jumped the gun 2 minutes. Broke my rule by 1 minute really. It was a minute shy, but we were breaking above that 50-cent level and volume started to come in. And again, I was buying out of the money calls by 50 cents. And you can see the next day it went right up there. And I sold them and then I bought the 23.50s and so on and so on. And but why else did I like this trade? So I love high volume dojis. Look at this chart. High volume doji. A doji is an indecision candle. The bulls and the bears duke it out. It closes really close to where it opened. And I like short dojis, short little wick dojis, not long-legged dojis. Those are much harder to trade. And the reason I like the shorter wicks is because I'm always bullish. If the next day or two, it closes above the high of the day on the doji, it means the bulls won and we're off to the races. If it closed below the low of that doji, it would be below the 8 exponential moving average and I would have went short. So I was using the 8, using the levels, using volume, using candles, using the retracement. I was using everything that I have. You'll notice I don't use MACD, I don't use stochastics, I don't use clouds. All that is lagging. The best indicator, if you said, Stephanie, one thing you can only use to trade, it would be the prints. Just show me the prints. That's all I need. Obviously, I like to use the 8 and see that. But I cannot trade without that. If my block trader goes down, I stop trading. I just can't. If I don't know what's going on, I don't know where the big guys are buying and selling, I personally can't trade. That's just me. If you like your indicators, you're making money with your indicators, absolutely use your indicators. But if you're not, it could be a distraction. You're putting so many things on your charts that it's analysis paralysis and you don't take a lot of trades because your MACD is showing positive, your RSI is showing negative, your this thing is showing you this, your this thing is showing you that, and you end up just watching. But it's so easy when you're using levels, volume, prints, and the trend. I don't even listen to the news. My television is on mute. Couldn't tell you anything that's going on or what they're saying today. So I think you're going to fall in love with the 4, the 8, and the 15 EMA. Try them out. Put them on your charts. It was love at first sight for me. So the next thing I'm going to do is talk about protection. Oh, so Stephen wants a summary. Day trade, use 15-minute correct. I do have it on my daily chart also, though. Yeah, it's pretty good, but I use it for a trend trade. And I use the 4 and the 8 on the daily chart. Now, I do have it on my 5-minute chart, but I'll tell you how I use it. Exiting. So if a stock has been riding on the 4 EMA on a 5-minute chart all morning, it's high-speed momentum. And then you have the first 5-minute candle that closes below it, I take profit. I use it for exits. Don't use it for entries. You're going to be late every single time. Okay? Use levels for entry. Huge, huge, huge. Okay? A lot of people make that mistake. And like, I'm always entering late. I'm like, well, which chart are you looking at? And they go, oh, the 5-minute, it crossed above the 8. Don't do that. Use the levels. Use it for exiting. I scale out. And then if it closes below the 8 EMA, another quarter or half. Try it out and see what works best for you. But I always get out into strength when I'm trading options. Options, especially if they're out of the money, are going to decay rapidly when the stock turns around. You don't want it. So if your target's $14.50, and you bought the 14.50 calls when it was 14.01, okay? And now the stock has gone up to 14.50. I can tell you that many traders will sit there and stare at it going, maybe it'll go higher. Maybe I shouldn't get out. Gosh, it might go to 15. Oh, I'm not getting out of this. And what happens? It turns around fast, drops. Your options are now out of the money. They went from out of the money to at the money or close to at the money. And now they're out of the money and they dropped from 40 cents to 20 in 2 seconds. Has that ever happened to anybody here? Just me? I'm the only one that's ever happened to? Come on. Not anymore, though. I'm so aggressive. Yeah, my traders will tell you. I am like, I'm getting out at 97 cents. I don't care. I don't care if it goes to 14 higher. So let's trust ourselves, okay? Let's get out when it hits that 50-cent increment. Right before 47 cents, get out. 87 cents, right? That last 8, get out. I'm telling you, 95% of the time, very, very happy. What's the worst case scenario? It keeps going. So what happens is I go and I roll my options to the next one. Yeah, most of the time I did very, very well. I follow my plan. We can't peg the top. We can't peg the bottom. Stop trying to do that. Okay, map out your plan and execute it. That is a fantastic trade. Trust yourself and be aggressive. Now, if you're trading stocks, you have more time. You don't have to be as aggressive. But options, when they go from at the money to out of the money again, will drop. And it depends what you're doing. I usually trade only options that are highly liquid. You know, penny spreads, 2-cent spreads, a lot of volume. I'm not trading really thin options. I'll get to that in a minute. And I will get to pivots in a minute. So what does put protection mean? I'm not talking about condom sense, okay? I'm talking about buying some puts, going to cash. I'm going to show you in just a little bit. When we get heavy dark pool levels, we have to pay attention. And we are getting heavy ones right now, okay? If they're buying, you guys, the SPY is going to 300, 320 because these are heavy. But if they're not, we're going down, okay? So I want to be prepared no matter what. And I'm trying to stay open-minded, okay? That's the hardest part about trading is being open-minded on both sides. And that's why I use these levels. If you're in my room and the SPY goes above that big level, 293, what was it, 58? If we go above that level, I must go long. I must. I have to teach my traders. That's why I love it. Keeps me very, very disciplined. If we're below, I must go short. Okay, I have to be the one to help everybody and show them the way. Running a live trading room has kept me the most disciplined trader I've ever been in my entire life. It makes you accountable. When you're in a trading room and you're calling your trades out, you have accountability. People know you're in this trade. Oh, I don't know. John is in. He's short. Is he getting out? Hey, John, what are you doing? Are you getting out of those puts? It's above the print, John. You know what? You're right. I got to get out. I got to go long, Stephanie. If you're trading by yourself, you might not do that. Okay. Nobody knows. I don't know if your wife, your husband knows, but most people brag only about their good trades, right? Not about their trades that don't work out. Well, I talk about both. Okay. So very, very important. So what are these prints that we're getting? These late dark pool prints. How are these guys getting away with it? Because I always thought you have to post your trade the day you do it. There are trades that are 24 hours late. They're not 3 hours. Go try to look it up and see if you could find it. When I was writing my book, I have a very big legal department. Very big. I had to prove every single recommendation, everything I've done, I had to prove it to my legal department. Okay. And let me tell you, that was a long process. But one of the things that they wanted me to prove was, Steph, you talk about these late prints, these late 24-hour prints. Where? Show us somewhere written on the internet that says these guys are doing it. And I said, really? You really think we're going to find that? We're not going to find that. This is a loophole. The only reason I know about it is because I see the trades and I can show you 1,000 pictures of them. But the only reason I know about it is because I was at the ETF conference down in Fort Lauderdale in 2013, and I got invited to dinner with the Bank of Montreal people. And I was in a Humvee limo on the way to dinner. This is crazy. And there was a floor trader that was sitting next to me. And I was with Larry Berman at the time. And Larry says something to this floor trader, says, you know, Stephanie really wants to know about those late prints. She's been screaming about them. How do they get away with it? He goes, you got to talk to this guy. This guy knows. I'm like, really? You know about these prints? He's like, oh, yeah. He goes, there's a loophole. He works at the desk of BMO, okay? There's a loophole. If we do a trade from our London desk and we cross the trade to our New York desk, let me show you a little picture. They cross the trade. They have two desks. They just don't have to report that trade for 24 hours. Yeah, it's like a thing. Oh, we get the ticket in tomorrow. You crossed it over the ocean. Guess what? You don't think Goldman Sachs took this to the umpteenth level? They're like, hell yeah, we can sell $100 billion worth of stock. Nobody's going to see it until tomorrow. Makes sense, right? Well, how do we know what these prints are? Well, we started to see the share size, and 501, it always started with 500 and 1,000. 501, 685, 501, 422, whatever it was. It always started with 501, and it came in an orange color on my time and sales window, because I had my time and sales window programmed orange above the ask, yellow below the bid. So I'd either get these 501s in orange or yellow, and I knew it was yesterday's trade because we didn't trade there today. We were either higher up or lower. But it's when they get heavy that we want to pay attention, because we do get quite a few of these every day. But when they add up to 8 million, 10 million, 13 million like we had yesterday, we definitely want to pay attention. So they started to come in 502. Right? 502, 634, 502, 888. We started calling them the Levi's. Oh, there's a Levi, there's a Levi. This is on the SPY, by the way, the S&P 500 ETF, the biggest ETF out there and the biggest dark pool trading platform. I mean, this is it. Most of the trades done in the dark pool are done on the SPY. And then they started coming in at 503. 504, and we've had 505s. Now, we always refer to the big guy as Goldman Sachs. Goldman Sachs. Yeah, they're the big guy. Coincidentally, Goldman Sachs refinanced Levi Stadium in Santa Clara. We really laughed when we figured that out, because we're like, are you kidding me? Goldman Sachs? Center of it all. Now, here's another even crazier coincidence. Have you guys heard of Gus Levi? Gus Levi. Senior partner, Goldman Sachs, from 1969 until his death. Levi, huh? You know what he did? He headed the trading department and pioneered new trading strategies such as block trading. So you tell me, is that a coincidence or what? Yeah, block trading. I know, it's crazy. It's ridiculous. There's so many other things I can't tell you guys, but this is one of them. There's some crazy stuff that goes on behind the scenes. So dark pool signature share size varies, okay, across the board. We have the S&P 500. The SPY has all those 501, 502, 503, 504, 505. One day we'll probably see a 506 when they run out of 505s. The NASDAQ is a little bit different. Starts with 410, 411, 412, 413. The Russell and the DIA, they like to half the Levi's. They're half of a Levi, 251, 252, 253, could be 254. And the DIAs we get rarely. When we get these on the DIA, we always get a big move. And guess what we got yesterday? 2 million. That's big. Sometimes they'll double them up. So we have seen a Russell and IWM with a 501, 502. Now, I don't report them every day. I only report when they're very heavy, and I give you the level on the Darkpool app. Okay, so these are them. Now, sometimes we'll get a 501 on the SPY. Let's just say the price is, 280, 280.26, and it'll be a 501. They may show us a 2 million at that same exact price. That is a Darkpool Levi. We count that. It's the same price as the 501. Or the other day we got like a 684,000. Very weird. I almost feel like they read my book and they're doing different things. I don't know, but they still give us the Levi and other levels. But pay attention to that price, and anything done at that price that day counts. Just keep that in mind. So I'm going to show you a pretty heavy day on April 30th. And I didn't show you every day leading up to this, but they were very small, 2 million, 4 million. And then all of a sudden, April 30th, we started to get a heavy Levi level. See all these 503s at 293.80. And we were trading at 292.12. So you can see they were late. The market was here. Okay, and these prints were coming in. 293.80 at 11 o'clock. Yeah, those are late Darkpool sell prints. And you can see I run on the app. First Darkpool print just came in. There should be more of those coming in. Bearish below. There should be more because they're like cockroaches. Now, if we do the math, 11 million times 293.80 gets you to $3 billion. Now, we did close above it, though. Splashed a little bit. So let me show you the SPY chart. Okay? Not time to go short yet, but we need to know something big is happening. The next day, look at that. The next day, bearish engulfing candle. That red candle engulfed the green candle before it. It was above it and below it, closed weak below the entire candle. That is a very bearish candlestick pattern. But forget that. Candlestick patterns have about 60-70% success rate. We were below massive dark pool prints. And this was the top. We had more. I'm not showing you everything, but we had massive prints on financials. We had money going into gold, bonds. So there's a lot of stuff into the VIX. I'm not showing you all that today. If you want to see all that stuff, it's in my Darkpool Fibonacci workshop that I just put out. But I just wanted to show you the essence of what it means when I say to put protection on, okay? So if you were in my trading room, I called out bought, SPY, protective, 290 puts expiring Friday for 24 cents. 24 cents. Cheap protection. Okay. And then I added to my protection going out to Monday, 290 puts. And if you have the app, I wrote SPY below massive dark pool prints right now, bearish below 293.80, 10.5 million. And then we had that 13 million level. Interesting. Wait a second. Is that the same? It's very similar. Hold on a second. What was the level we had today? What was the level we had? 1 second. If anybody knows, what was the 13 million level yesterday? Hold on. I'll get it up. 293.59. That's very close, you guys. Ooh, just noticed that. 10 cents difference between that 13 million that we had in May and the 13.5 million that we had yesterday. Very interesting. Okay, take note. So I put protection on the app. We're below massive prints. Now, you don't have to mortgage your house to put on protection. Again, it was so cheap. I'm letting you know that we're below really big levels. It's bearish. If we stay below these levels, Yeah, that's going to be really, really bearish. But you definitely want to. If you have longs, you want to protect that because something big is going on. I don't call a correction every day. And so Bill wrote, wow, the volume is crazy. And then I tried to assure my traders, because I had a lot of new traders in my room, that we're going to make money on this ride. Like, this is okay. I'm very, very calm when we have a correction. It's okay. We're below the prints, everybody. Everybody everybody was so quiet. I'm telling you, you could hear a pin drop in my room. So I wrote, does everybody have protection on? Because people call out their trades in the room, and nobody was calling out anything. So I wrote, does everybody have protection on? Helmets, seatbelts, I'm trying to be funny. Robert, the mole man, he was the first person to speak up. I took the Monday 290s. Thank you, Robert, if you're here. And then I said, we're below the prints. You must buy some puts, because people were still really quiet in the room. It was like they were just in shock. The first time you see it, you're in shock. The second time you jump on it. So Valerie, she's a new trader in my room. She's like, are you calling a correction, Stephanie? I was like, if I say put protection on, yes. Calling a correction, okay? After the bell rang, and you can see right at the bell, make sure you're either in cash or you have protection. Options are still open for another 15 minutes on the SPY. So even if they missed it, they had another 15 minutes to buy, and they were so cheap, okay? And you can see we came down a lot from that. So we had a lot of other prints. I'm not going to show you that, but this is recent. On June 20th, last week, which is my birthday also, we had a big dark pool level, by the way, 293.12 on the SPY. And you see those 501 prints? But then look at this one. Same price, 293.12, but it's 1.2 million. Yeah, these are the weird things that they've been doing lately. Here's a 1 million, same price. Here's another one, 1.2 million, 551, 969. And then on June 25th, yesterday, oops, I didn't draw arrows to these because I just posted this up. I did this last night. I wanted to show you also that we had these 504s, 293.59. You can see we're trading down here at 292.70, 504s. Okay, look at all these. Same price. Anything 293.59. They're all, look at this, all day long. That doesn't count. Here's a 504. But you can see we got this. Nope, that doesn't count. Here, 694. Yeah, highly unusual. 504. But the same price. And again, adding up. Yep. Yeah, so Joey, it takes them a long time to sell everything they want at the top. So it's not like we get one big day and bam, we're going to go down. A lot of times they'll keep it up for a day or two, sometimes a week, and then bring it down. But we should see heavier levels within that week. All right, but I'm just saying, be on the lookout now for a big move coming. Without a doubt, I'm going to say a big move. Now, if it's buying, we're going to go long, okay? But if we stay below these prints, we got to go short. That's all I'm saying. I don't think they're done. But we did have big prints on the, which one? The DIA. Oh, here, the QQQs, the Russell. These are the QQQs. So here you see, here, wait a second. Yeah, these are the QQQs, right? 413, 413, 188.10. Here's a double. They doubled the 413. See, and they got 826. So we'll see doubles, sometimes double and a half or double and a quarter. That's sometimes how we got those weird, funky numbers. If you do the math, you may get that. Or sometimes it's very just weird, like this one, 495. Yeah, this is something new that we've been noticing. And here's a 247, 188.10. Yeah, but definitely heavier for the QQQs. And then I wrote yesterday DIA, late dark pool sell prints coming on from yesterday. Unusual. I wrote unusual because it doesn't happen very often. And then I bought that. I put on some cheap protection tonight because we are below the prints. Okay, if we stay below and close week, I'll put on some more, or we may go up a little bit, but if we come down again, then I'll add. So trading the whispers versus the new push notifications. People ask me this a lot, and the whispers are the best trades you can take, because what I'm doing is I'm getting up very early in the morning, 4 a.m. in Vegas, 7 a.m. Eastern. I am reviewing all of the pre-market price action. I'm looking to see where the big guys have been buying and selling before the market opens. I'm looking at my ECN books, the Electronic Communication Networks, the ARCA book, the NASDAQ book. The NASDAQ book is the IMET, the infinite machine I used to sit in front of when I was very young, monitoring the dark pool. If you don't have these books, then you are not seeing the institutions and where they're at. I'll let you know, but you should really have them on your own. Why not? Why don't you want to see where Goldman Sachs is buying and selling for yourself? So that's what I'm looking at in the morning. And I like it because I'm using current data. I used to do the weekly whispers, which I may go back to doing every once in a while. But in the morning, I see where they're opening it up. I see where they're selling. So I can give you a precise level today, where to go long and where to go short. The only thing that I think messes people up is that second time around rule. Second test. Now, legally, for my legal department, they don't care about my second time around rules. If a stock breaks above my whisper level and it doesn't move and then goes below it, it counts as a loss. If it goes above it and goes, it counts as a gain. So even though I won't take it because it's the first test, I still have to count it for my gains and losses. But that's okay. I really don't. I don't really care about that. But I want you guys to know that if a stock is coming up to 183, that's a major level, dollar increment, first time, I wouldn't go long. Let it pull back. Second time, moving above it, volume increasing. As long as it's not during minion time, you're good, and so forth. So that's the one thing I kind of wanted to stress today is second time around rule is really, really big. Trade the whispers. The new notifications are there to let you know if you're in Apple, hey, we got a new Apple print. Use these levels. I just want to let you know 1 million shares just came in like it did the other day, right? We're above that. That's a great whisper today, by the way. And watch this level, because if you're long and it goes below the print, you might want to get out, right? And if you want to day trade it, okay, you could day trade it, but just know you could get splashed. I always tell my traders to trade yesterday's whispers. Those are your best trades. So the next thing I'm going to show you is how you can use futures to trade the dark pool. I started putting futures into my whispers. How many of you trade futures? Joey has a question. So when a push just says print, you're saying the stock was bought. I'm not saying the stock was bought or sold. I'm saying a trade happened. Okay, you want to learn it? Never, yes, not me. Yeah, so I don't trade futures, but I watch them like a hawk. And I know a lot of people do trade them, so I put the levels. I'm going to show you how I use pivots. They're amazing, amazing, amazing. I use them for my levels. You'll see weird numbered levels coming out, targets. Those are all based on pivots. But I do use it when I'm trading gold, when I'm trading oil, when I'm trading the SPY. I watch the E-minis, I watch the oil futures, I watch the gold futures, and I watch the dollar. And I'm going to also be showing you how you can pick the best option, strike, expiration, trading the dark pool briefly. But for those of you who here doesn't have the dark pool app, you just decided to come in today and check out what it is. Anybody here that doesn't have the app? I really did this, and I'm happy you came if you did. I'm happy to see what it's all about. I'm sorry, what?
Second time roll around.
Oh, I'll have to show you on a chart. Yeah. Okay. So I did this webinar today mostly for the people that have the app that are confused, that have not read my book maybe, or you read my book but you're still confused. The book is pretty good though. Or you've maybe not taken any workshops and you just don't know what I'm talking about, right? You don't know these rules. So that's really why I mainly did this today, just to kind of go through the basics. There is a lot more to learn. Can't teach you everything in 2 hours, but I definitely wanted to teach you a lot. So I hope you got a lot out of this so far. If you don't have the app, before I go further, it's really easy. You can download it, the actual app, for free. If you have the Apple, just go to the App Store, click on the search, and type in dark pool, 2 words. And there, this will pop up with my W icon. Get it for free. If you have an Android phone, go to the Google Play Store and type in dark pool. And you can get it for free, but you're not getting everything for free. You're just downloading the app for free. The public feed has all my tweets like on Twitter, but it's the private feed that has all the good stuff. Okay, this is where I post all that stuff. All the push notifications that you saw today are in the private feed. It's only $19.99 a month. We were going to raise it to $50. But I really wanted to keep it affordable. You know, what is it worth? I mean, for those of you that have the app, I'm really curious. And I'm not raising the price. I am not. But if you had to put a value, okay, if you had to put a value on what you thought the app was worth, can you put it into the chat box? And hold on a minute. I'm curious. Priceless. I just, because it's so hard for me to be objective, and I'm not going to raise the price. Okay. I'm keeping it where it's at, but I'm just curious. Okay. So we have 99, 34. Okay. Only for you, bad boy. I'm raising yours to 34. That's it. 150. Okay. Awesome. 50 is good. Yeah. How much would you value the app? You pay $3 more. Okay. Tag, since you've gotten it, you made over 200,000. Really? Holy cow. We're not charging enough for it. No, I think it's fantastic. Honestly, look, I'm doing all the work for you. I mean, I'm literally in front of my computer. I don't move. And I know what's unusual, and I love it. I absolutely love doing this. I'm so glad I get to help more people that are not in my room. I know my room is costly. I get it. But you know what? We think it's worth it. And I know many of you can't be in the room due to many things. And I just want you to have something you can use to trade off of. Okay, that's affordable. So thank you. All right. So my room is not a beginner room. It is an advanced. It was at one time. Back in 2013, when I only traded stocks, it was a very beginner room. It is so not a beginner room anymore. It's highly advanced. We have traders in there that have worked their tail off. And my trading has gone to such a different level in 6 years. It's mostly options. Some people trade futures. Some people do trade stocks. But it is 90% options, I would say. You have to be trained by me first before you come in. You can't just come in. You would be lost. So you have to take my boot camp class. I'll show you if you want to sign up for that. But again, that's the key. Now, if you have not read my book, it's free. If you go to darkpoolsecrets.com, You just have to pay for delivery. We use a fulfillment house in Kansas City, special needs kids that actually pack my book. I've met them. They're amazing. They have a job. These are kids that didn't think that they were going to even have a job in their lives. And here they are. I went there. I saw them packing the books. They put a cute little card in there. Anyway, we need to at least pay them for what they do, but the book is free. Okay. Definitely get it. There's a lot of great stuff. And I do have more. I'm going to go show my live screen in just a minute and finish. But if you do have questions, you can email me, Stephanie@thestockwhisper.com. You can go to the darkpools.com. I have all my workshops there. We are opening a beginner newbie training room, a training pit, August 5th. We'll be sending out an invite. It's going to only be $99 a month. You're going to learn all the basics, how to set up your software, how to, what options are, basics. Really, really great stuff. If you are new, I highly recommend that you join that. The Java Pit is a trading room, completely different. But if you go to, hold on a minute, and I'm going to finish teaching in a minute. Let me just show you. If you go to the darkpools.com, it's plural, the darkpools.com. Here's a website where I have a storefront. And I have a lot of great workshops that you can download, plus my 2-week boot camp, which is going to be July, what day is it? July 15th? July 15th. Day trading week, July 29th. You can find out more about it. Read all about it here. Sneak preview, everything that I teach in the class, and testimonials and so forth. But it is all live trading. Let's go back to the store. Okay, we have level 1, level 2. And if you want an autographed book, you can order one, and Matthew will personally ship it out to you. If you live outside the US, you have to get it through here. Our fulfillment house doesn't go there. All right, so that being said, I want to go on to futures. Let me show you my future screen. Okay. Okay, hey, Blue Fire, you'll be joining the newbie room. Excellent. Yeah, the boot camp. Again, I teach you everything live. There's no other way for me to teach you. I have to teach you before you come in. It's just not fair. You'll ask a million questions, and again, it's a must. Okay. Just 1 second. I just have a question I think that I need to answer. Okay. So let's see, Eric, are they talking? And before I move on to futures, which I'm just going to put here for a second. Are they talking in code to each other by using the Levi's? Absolutely. Joey had a question. So when you see large prints coming in higher than the current price, yes, they sold yesterday, and that is bearish. When they're lower, it's bullish. But Joey, you have to keep in mind, it has to be a heavy level. We don't just do it for 2 of these or 3 of these. It's got to be heavy. 8 million, 10 million, 13, 20. I've seen 35 million. We've seen one day. So it has to be heavy. So Robert, because the print is higher than the spread, it's a late print. Yeah, it's yesterday's usually closing price. That's how we know. We're close to where it closed. Yep. A lot of times it didn't even trade there today. And Angela has a question. How can you see if the prints are buy or sell? So you can't. You don't know at first, but if it's higher, it's most likely a late dark pool sell print. If it's lower, most likely a late dark pool buy print. And what filters am I using is another question. Okay. So yeah, LiveVol Pro is great software. I can go back to any date. So somebody give me a date. December, oh, how about if I do December 26th when we have those late buy prints, right? Even better. I can start December 24th though, 2018. I'm going to go to SPY. I can go back to 2011. Oh, why am I on June? Hold on a minute. It didn't stay. Let's go to December 18th. We'll go to the 24th first. And I'm going to search above 500,000. Yeah, Paul, you want to put what the newbie room's going to have in it? Paul's going to be running it. Yep. And Jay and Jane. I have three really amazing traders that are going to be running the training pit. And I will be coming in every Wednesday to do a presentation. Yep, it'll be on the dark pools. It'll be talking about trades I'm taking or took, all sorts of things, candles. I'm going to teach you beginner candlesticks. I'll teach you beginner futures. So, okay, we have on December 24th, right? Let's look at these 504 prints. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Quite a bit. 15 there. Wait, there's more. 15, 16, 17. So that's about 8 million. It's a decent level, all at 240.83. Now, 240.83. However, wait, we were at 237, 238. So these were still higher on December 24th. Okay, these were still higher than 239. So we couldn't go long yet until we broke above that. But guess what happened December 26th? Insane. We got a 12 million level, I think. December 26th. Hold on, it's loading. You see all these at 234.31. Okay. 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 30. It keeps going. Look, it keeps going. The biggest level ever. And the key is that these prints happened at 234.31. And look at the price as it went up all day. See this? It went all the way from 233 to 240 to 248. We went above the days before dark pool prints. And that's why I was screaming, dark pools buying, go long, go long. And I did tell you, if you have the app, about that 240 level the day before, and so on and so on and so on. And that was how we knew this was the bottom. This was massive. It was the first time that we went above a dark pool level in a long time. So this is LiveVol Pro. You can get this software if you get the core version. He has two. It's mostly for options. I'm the only person that uses it really for this. And Vinny, go speak to my guy Vinny over there. I don't get paid 1 penny on any software that I recommend. And trust me, this guy wanted to pay me 20 times. I said, I don't want to get paid. I like the software. Make something affordable. It used to be $300 a month. So nobody in my room had it. I pretty much had it for everybody. But he developed a core version because I told him that this is all I need. Vinny, can't you just develop something just for the prints? I don't need the options. I just want to look back and back test, or look back and find any prints on anything. So he did. It's 99 bucks a month. And so, yeah, I'm happy he did that. Oh, my traders love me now because they're like, I have it now. It's only 99. Because 300, even though do I think it's worth it? Yes, it's very pricey. So, yeah, so the training pit is not a trading pit. Exactly. It's not. It's training new traders. Your husband, your wife that's never traded, doesn't have software, doesn't know where to begin. How do I set up my charts like Stephanie? How do I set up the block trade indicator? How do I do a trade? What is an option? What are the basics? That's what the training pit is about. I will post all of my alerts in there, like I do on the app, in the alert tab. And I will come in and do meetings and talk to you every week and share my favorite dark pool prints that I'm seeing, but it's really a stepping stone for traders to start at. We didn't have that. I had a lot of traders that went right into my boot camp and they were completely lost. And I don't know what you're talking about, Stephanie. I don't even have my charts. I don't have my software. Like, how are you trading? They're trading though. Trading from their phone on an app. And I said, okay, oh my goodness. We have to develop a room that gets you trained for this first. And that's really why we developed it. So the training pit will be available at the end of August. I'm sorry, July. We'll start opening it up to sign up right at the very end. Beginning of August. August 5th is our opening date. So if you're interested, you can shoot me an email or wait. We'll be sending it out. You'll know when we're ready. I'll be putting it out on social media and all that good stuff, okay? Yeah. Oh, okay. If you want to sign up for the Java Pit, who is A? If you've taken the boot camp and you want to sign up for the Java Pit, send me an email and we'll check that out and Matthew will show you how you can get into it. Okay, Stephanie or Matthew. Yep, Paul will be teaching on Mondays and Fridays. My boot camp class is anywhere from 50 to 100 people. Yep. And it's all live trading. I pretty much get you into the trades first to teach you about entries. And then by the end of the week, you're getting in and out by yourself. I'm pretty much just mapping out and helping you along, God bless you, helping you along with it. But I give you exit plans, and then I do go into options. First, we start with stocks, though. You have to master that. Once you do, then I show you different options. And I teach you how to trade during earnings season, which is really important. How to bypass sneaky little things you can do to trade the bank stocks when they're coming out, oil stocks, tech stocks, how to trade them before they come out, after they come out, swing trading, and longer term seasonality trading. I cover everything. Okay, but I want to just go into the futures, you guys, because we're running out of time. So I use the futures, really important when I'm mapping out. Yeah, I can't get this bigger for some reason. 1 second. Right. Oh, there we go. So I use persons pivots, and I share this screen, by the way, with all my traders in the room. They can toggle back and forth between futures, my main screen. And this pivot is so pivotal, all right? So pivotal. You can see at the bell, the worst time to trade, I told you, right, is at 9:30, the first 15 minutes. Do you see what they did? They took it above it and then brought it below it. Yep, I think they leave the minions in charge the first 10 minutes as well. So we don't enter new positions, but we do exit our swing trades the first 10 to 15 minutes. Yeah, it's great. Take advantage of that shakeout period. Now, what the pivot is, it's John Persons, great guy. I love him. He was a floor trader back in the day, and they used this formula where they took yesterday's high, yesterday's low, and yesterday's close. They added those together, and they divided by 3. And they get this number, this pivot. And whenever the stock went above the pivot, they'd go long. When it went below, they'd go short. Well, guess what? Computers are programmed to use this. It's fantastic, okay? It's so good. It saves me so much money. I'm not going to go long on the SPY when we're going up to a pivot. We need to break above here with volume. And you can see the volume is waning all day. I use volume and pivots a lot. We're kind of doing nothing. We're actually, looks like distribution. Yep, going sideways and selling without moving it down. We'll see what prints come in. I don't know if we got any big SPY prints yet today. I'm going to look in a minute. But we have R1 is this dotted line, R2, and R3. And I do talk about this in my book. So we have computers loaded to sell on these dotted lines. 1, 2. Whenever we get to R3, it's overbought. And we usually see a move up and then bam, we come down, and that's the top for the day. According to John Person, if we break above that R3 and we stay above that, that is uber bullish. And I find it can happen when it happens really quickly in the morning. Like you come in and we're already like right at R3 and we go above it. Then we're usually on the next sphere up, you know. But normally if it took all day to get there, you know, we're kind of going like this. And then at the end of the day, we reach it, that's the top. Okay, so usually. The solid lines are Pivot Boss Camarilla. They don't come with Thinkorswim. This is Thinkorswim, by the way. And there are another set of pivots that are phenomenal, and computers are programmed to buy and sell on those as well. So you'll see a lot of times in my daily whispers that I will put these levels. Why is she using that level? It's a pivot, most likely. If it's not a major level, it's usually a pivot. Okay, that I'm putting there. So if you trade futures, now we have S1 support, S2, and S3. And it's the same thing. It'll usually go down, bounce. The second test with volume, if it breaks through, yep, we go there, and then when we go to S3, oversold. Same exact thing as at R3. So they play pivot pong. And this is how I use for my exit. So if I'm short, you'll see me covering when we come down to these pivots. And if I'm trading the SPY, I'm watching the SPY pivots and I'm watching the E-mini pivots. If I'm trading gold, here's my gold. I absolutely love it. You can see, look what we came up to. Amazing. Right at this Camarilla pivot this morning and moved down. So why did I pick this morning? Let me go to my whispers. Okay. Why did I pick 14? Where's my gold? Yeah, 1420. Anybody want to take a guess? Well, it's a round number, but I wanted to be above this Camarilla pivot. Okay, and I like round numbers too, above it. So that's why. So this way it won't get shaken out. So you didn't take gold long unless the gold futures are above 1420. That's why I picked it. I'm bearish below 1397. Why? Because I wanted to break below 1400, number one, but we had this little Camarilla pivot today at 1398.70. So I picked the next level below it, 1397, let's just say. I want it to be below it because there's room to go down if we go below. And there's room to go up until we hit our head on the pivot. That's why my third target on the gold futures are 1428, right by that pivot. So there's always a reason why I'm picking these. So again, I'm really in essence doing all the work for you, but I want you to know why. If you don't know why, you're not going to have confidence to get out or to get in at a certain level. But if you know, oh, Stephanie did that because of the pivot. So now you know why. Okay, so oil, same thing this morning. Look what we did. We went right to R2 and look at the high volume. This is crazy. See this? We went right there. Look at this volume, came all the way up here. Why? Computers are loaded to sell there. And then it played pivot pong. It went from Person's pivot to Camarilla, Person, Camarilla, and you can see who won there. Yep, and then we went down to R1, bounced to Camarilla. What was once support is now resistance, and then we came down. Love it, love it, love it. It's fantastic. We had the oil numbers, right? But why did it stop there? And so what did I do this morning? Let's go to that trade. So this morning I put bullish above 59. And I put target 59.22, 59.37. We hit them all. 59.50 and 59.67. Why did I do that? Because that's the Camarilla. That's why I picked that number this morning. All right, we got a little bit higher. Are you guys blown away a little bit? If you have not watched pivots, this blew me away when I first saw that they trade off this. Yeah, it's Pivot Boss Camarilla. Here. I just spelled it out for you. It doesn't come with Thinkorswim. It's a separate subscription. Yeah, if you're in the trading room, we have it there. But you can get Person's pivots. They're amazing. Okay, so I watched the dollar as well. I'm just going to go into that. Really important. The dollar also trades pretty well on the pivot. I don't trade the dollar per se, but I do watch it. In fact, I like to look at this weekly chart. Oh, let me just go. Yeah, draw a trend line. Hold on a minute. Oh, I went to 4 hour. There we go. Yeah, so this was really key. We broke below this long trend line for the dollar that we have been on, and that's not good. Yeah, it's not a good sign. We could retest where we broke down first. That happens a lot. We'll retest that area, and then we'll come down again. Yeah, but it's not good. We broke, whenever you break a trend, you see we're making higher highs, higher low, higher high, higher low. Did we make a higher high? Yeah, slightly. Not that much, but slightly. But then, yeah, that's not good if we are breaking this trend line. If we break this low, that's uber bearish. That's really key. We'll go to 94 really quickly before we bounce up and then come probably down. I look at the gold futures. So you saw that cup and handle formation that I took that picture 2 weeks ago, I think, right? On the gold. And I know you thought I was crazy. Everybody thought I was nuts. What do you mean we're going all the way up here? We had massive prints on IAU, and that is a dark pool favorite. So, you know, where are we now? We're kind of up thrusting. It's only Wednesday. We'll see how this candle closes. But yeah, it's parabolic. 1420, really watching that. And this trend line right here is pretty strong. Okay, this is a trend line that goes pretty far back. If we need to close above this. Yeah, we went above, but we up thrusted, which they sell. An up thrust is a Wyckoff terminology. If you've ever studied Wyckoff back in the 1900s, he was phenomenal. An up thrust is a false breakout. They take a stock above a major resistance trend line, which they did right here. It looks like it's breaking out, but then the sellers come in and knock it down. The next week's candle is very important, though. It has to attempt to go up again on less volume than this week's. And that is a true definition of a Wyckoff up thrust. But if we close above this wick, that is so bullish. So you can watch for that as well. I'm just going to put this back to the dollar. Okay, so I've covered, oh, hold on a second, the DXY. Covered the futures. And so I do watch this. I watch these pivots very carefully. I do use stocks on the pivots as well. And I just want to go into options slightly. I'm not going to spend too much time on it. And now you can all see my account number. There we go. Okay, so I don't trade out of Schwab, by the way. This is my Schwab. I do long-term pension plan, but I don't short-term trade. The commissions are way too high. I use it for their dark pool. Don't call them up and ask them about their dark pool, please. Yeah, they'll start charging a lot of money for this if they know that it's valuable. So you kind of keep it secret. But it's really easy to set up the block trade indicator, launch tools, block trade indicator right there. I open up 4 of them. And I have 50,000 and higher. You can go into actions and you can go into tab settings and you can set it up. Click on NASDAQ, New York Stock Exchange. Custom list, I put all the Dow stocks in there, or else for some reason they don't pop up because they have the NASDAQ and the New York. My first column is 50,000 and higher. I click OK. My next column is really 400,000. Same thing, 470. For some reason, I picked that number. And I get to see all the biggest trades, and I pay attention really the most to this. This is the good stuff. My next column, and I have one just for the SPY. I like to look and see. We didn't get any dark pool prints yet today. They're quiet. Okay, so the next one is all bulls and bears. I call it my correction indicator. I have the Russell, the Qs, the VIX, the TVIX, the fear, the bull and bear inverses of all the major ETFs. The FANG stocks are in here. Yep, all the good stuff. And it's 20,000 and higher because I want to know if a 20,000 share print happens on Amazon. It's going to pop up here. Then I have this one is also my favorite. Commodities, gold, silver, oil, dollar, all those good stocks are in there. I have one just for FCX because I love to trade FCX. And you can set it up any way you want, okay? But this is my ATM machine. It's insane. Here are some pretty big prints. Ooh, look at this big print on XLF that just popped up. Okay, so I'll walk you through how I set up. You can go over the recording, okay? If you missed anything. Yep, Charles Schwab, Street Smart Edge platform. Don't call them up and ask them, okay? So XLF, we just had this large print that came in, 1.4 million. And if you have the app, you know, I don't usually post too many like that. I mean, there have been 3 million prints before we had the correction, if you recall. But this is pretty big. So I like to pick a bullish level above that, above the 8, and a bearish level below. So hold on a minute while I, where's my app? You guys are actually going to see me do one live. Okay. So here's where I do my posting. XLF. And I'm going to put it's not massive. 3 million is massive, but very large, 1.4 million print. And then I put the price, 2706. And we're going to be bullish. I like to go on the daily chart above the 8. I'm going to do 2720. Right? You know why I picked that is because there's room to go above there. And then there's room to go below there. So bullish above 2720. And then I'm going to do bearish below 2687. Why did I pick that? That's an 8th, right? 8th level, the next level down. Give it a little bit of splash room. I don't want to do 27, so I'm always bearish below the print, but I also want it to clear. Let me make this big for you. I also want it to clear the simple 30 moving average. There's going to be support. It came down to it already yesterday, went a little bit further, but hammered. Buyers came in, and then they pulled it up here. Sellers came in. There's a battle going on between the simple 50 and the simple 30. So if we break above, it's bullish. And if we break below, I'm going to go a little bit below there, 87. I'm bearish. Now XLF moves slow. So you can see a lot of thought goes into these levels. That's why I don't want you to front run them. A lot of people do that. As long as you're below the print, look, you can say to yourself, you know what? I think it's selling. I'm going short. Okay. We're below the print. You could do that, dip a toe in. But if it goes above the print, stays above the print, you don't want to be short. So I give these levels to help you avoid the splash. That's the whole reason behind them. But the next day, if we test the print tomorrow, and I'm just going to post them in my trading room. Hold on. If you're in the room, I posted in the alert tab as well. Just like I'm going to do right now. And if you're in the training pit in August, I'll be posting it just like this as well. So tomorrow, if we go to 27, let's say we go down a little bit, but we don't break my level. We go down, we go up, we kind of do this. But tomorrow we go up and test the print and then turn down. That's when I like to go short. We tested the print, went down. If we test the print and go above it, I'll dip a toe in, but I'm really bullish above 27.20. Okay. All right, so did the trade happen today, Brian? Brian says Ford is up today, so that trade should have already happened. What are you saying it's up? What trade happened? The bullish above, bearish below? Print? So that happened today, right? So what did I tell you? The best advice I could give you is trade yesterday's prints. It could still be splashing. Okay, the biggest mistake that most traders make when they first start trading on the dark pool is they enter too early. And I'm telling you right now, this is the biggest mistake, and I'm sure you're going to make it. It's like it's, you know, you got to be an alien not to do it, right, Paul? We're human. You're going to do it. Oh, she was right. Oh, my goodness, she was right. I should have waited. It's okay. Some of you might be really disciplined and listen. But I know some of you are not, and that's how you learn. But learn on paper and don't learn with real money. That's the best suggestion. Yeah, trade tomorrow. Now, if we get a massive print, I didn't post anything massive, did I yet today? When we have massive, I put a strangle on. See, you made that mistake. I know, we all did. Yep. Yeah, you can trade the daily whispers. Yes, those are the trades I set up for you with entries and exits. Correct. Trade those that day. I have to, I do a gain and loss based on that day. That's how I am judged by my legal department. All right. That's what I want you to trade. The new push notifications like the one I just sent, wait until tomorrow. Or if you must, dip a toe in. If you do options, buy 2 contracts. If you normally do 10, buy 2. If you have to go in early, you can't wait. Now, whenever we get a massive print, I'm going to go over in options strikes in just 1 second on this. If we have a massive print, okay, that's when I like to strangle. So that's when I don't want to wait. I kind of want to go out 4 weeks and put that strangle on like I showed you. Okay, wait, hold on 1 second. Let me just get you a new one. Let me just post this. Hold on a sec. Let me just open up a new one. That one was, okay. So XLF. Now XLF is pretty slow. I would rather trade Bank of America when we have XLF prints, but I'm just going to show you both. Okay, so now today is, we have another question? Zenabar, how do we get in if we're kind of late to the party? So you missed the trade and it's time to move on to a new one. My question to you is, why are you late? Were you not here? Were you working? Or did you actually see it, but you didn't have confidence to take the trade? 2 different really big reasons. Okay, I was before 940. So I get that. I move to the next level. I'm going to put up Microsoft in a minute. Let me just work through this example, okay? Okay, so, and it's going to take you a little bit of time to experience this. You have to experience. You're going to see it's going to get easier and easier and easier. You're going to see things. Oh, I've seen that before. Oh, I know how to trade this. I know how to trade that. That's the thing I can't give you today. I can give you rules. I can give you guidelines, but I can't give you experience. You have to have that. Okay, that's time. It's not going to take you that long. Or some of you may take longer. I was a really slow learner. It took me very long. I paper traded for 2 years before I did my first trade. How many of you paper traded for 2 years before you did your first trade? Oh, Lord, Angela's saying. Now, the reason that happened to me, Angela, is because I didn't start out saying I want to be a trader and I'm going to open an account and here I go. It was 1994. I didn't even have a computer. I'd have to call a broker to do a trade. So I have that on my side, okay? But the reason it took me a long time is because I was an assistant to one of the best traders at Schoenfeld. It was my job to help my trader get in and out of his trades and to keep track of them for him, okay? So I didn't go into it saying, oh, I want to be a trader. Here, let me open this account and here I go. It was, okay, here's this great job. I'm going to be this guy's assistant and he'll teach me everything I need to know. It wasn't until 2 years later that he decided to move to Florida. We were in New York because he didn't want to pay New York state tax. And he said, I'm moving. I was like, well, what about me? And my firm at the time had a lot of confidence and knew that I knew. I mean, I was trading for Scotty. That was my boss. I was doing all of his trades at that point. I was saying buy it, sell it. I knew exactly how to trade. I just wasn't actually trading my own account. But I didn't even think like I could do this. And there were no women in the firm doing it. And I was just an assistant. But I got called into one of the boss's office, Howard. Steph, could he come down? And Howard's like, Steph, we want to give you money to trade. You had to see my face. I almost like fell off the chair. What do you mean? Oh, wait, you know what you're doing. It's a prop firm. I mean, they gave money to traders. They're like, we give money to traders that don't even know half of what you know. We want you to trade for us. And I mean, that was like, it was huge, huge. And I did very, very, very well my first year because I learned first. 95% of people out there are trading and shouldn't be trading yet. Seriously, you shouldn't be trading yet. And you're going to hate me, but I care. I actually care about people. I care about you. And I don't want to see you losing. This is not gambling. This is a career. This is, you have to experience it. And some of you are going to get it in 3 months and some of you are going to take a year. But when you can honestly make money paper trading without asking me what I should buy, what I should sell, knowing, and you have to treat it like real, like take it seriously. People paper trade, they do 1,000 contracts, and then they go to real money and they do 2. I mean, how is that going to help you? That's not going to help you. It has to be so real that even your wife thinks you're trading, and you're not, with real money. Like that's how real it has to be. Seriously. And then you start small. And with options, you have to do 2 contracts. You cannot do 1. You will have severe exititis. But you start with 2 and you work your way up to 4, to 8, to 10. And then as soon as you feel uncomfortable, there's a spot that you don't trade properly. And this happened to me with stocks. I was trading 500 shares so happily, so great. I bumped it up to 1,000 and I didn't even recognize myself. I was scared. I was like, oh my gosh, I have to get out. I have to get out. It was so uncomfortable for me. And everybody at my table was doing 1,000 shares. Some guys are doing 5,000. But I didn't feel comfortable. So I dropped down to 500. And I mean, I was doing like 30 swings at night. It was a lot of positions, but that was my spot. It doesn't matter how much money you have, how little, there's a spot that you don't feel well in. And when you hit that, you bump it back down again and you stay there. Okay? Very important. Now, there's a lot of people also, I want to mention one more thing because psychology is 90% of trading. I mastered in psychology and I think it's so important, more so than majoring in economics when it comes to trading. But there's a lot of psychology that happens. Traders do very well on paper. They switch to real money and they don't trade right. Anybody here ever have that happen to them? Great on paper, you switch to real money and you're like a different person. Like, who is this alien that is in my body today? This is not right? Why? Well, you have an issue with money. Yep. You have an issue with money. Well, you might be trading too big. You have to go smaller. Okay? You might start out too big. That could be a reason. Or you are scared. You don't have enough money to support yourself. You don't have enough money to pay for your bills. You can't have this as your career yet. My most successful traders are my traders that aren't stressed about money while they're learning. And learning is you're starting trading real money. You're still learning small share size. Yeah, until you get to that share size that you're making more money than you made at your desk job, that's when this is real. And that happened today. I'm going to show you this again. I showed you this in the beginning, but it happened today, and this is so priceless for me. Ranjit's been with me for a year. He joined my chat room last May. I took this picture from my trading room today. He posted it. He said, I joined this chat room last May and attended the boot camp in August. Yesterday was my last day at my job. Thanks to the many successful trades I've had since becoming a member. Massive thanks to you and the fellow pitters. And it's not just about me. It's about my room. I mean, I'm good. I call out good stuff, but my traders and my room, we all work together as a team. No egos. I am not better than anybody else. Nobody's better than anybody else. And that's the way trading should be. And it took him a year to get to that level. No stress. He kept his job. He learned. He earned. And then he finally felt comfortable. I know this. I have this. If you're not there, it's going to be very, very hard psychologically. Okay? Okay, so the second time rule, Lisa. Have you got my book, by the way? I'm just curious. Okay, I do cover it in the book. I don't know what chapter it is, but it's in my rules. And I do show pictures of it. Yeah, read my book again. I'm telling no, a lot of people read the book. It's a lot of stuff. And I wrote every word of it, by the way. And there's a lot of content. And you need to read it more than once. Even traders that have been in my room for a year have read it 3 or 4 times. But the 10 rules for trading the dark pool, chapter 6, I believe it's in that. But what it really comes down to is the second time a stock hits a level. The first time a 50-cent level, or even this 20-cent level, okay? We'll just go over this level because I do enter day trades on the 20. We went up to it, okay, right here. Hold on. Okay, you see that we went up to it at 10:30 and pulled back. And if we went above it 25 minutes later with volume increasing, that's when I would enter at $27.21. Not 5 minutes or 10 minutes later, but 25 minutes later. I wanted to rev. I wanted to push back, rev up its engines and break up through. It works best on 50-cent increment levels, dollar increment levels, and so forth. Yeah, it's the second time. Now, the only time it doesn't do that is if a stock just had earnings. Momentum is flying. Whenever it's riding on a 4 EMA, on a 5-minute chart, hold on. A lot of times it may not do that. It may not pull back or whatnot, but usually, yes. And mind you, this happened at 11 o'clock. We should not enter at 11 o'clock, right? The minions come in. Look what the minions did. They came right in. This is a perfect example. Yep, let's bring this up, fake it up, and then let's push it down. We're in control now. Ha ha. And they're just moving, you know. They faked it up. They know they're taking it down. It's bearish. We're below the prints right now. The minions are Goldman Sachs's assistants. When the Armani suits, I call them, the big traders go out for lunch, they leave their assistants in charge and they tell them, whatever you do, stop everybody out. You see all those stops? Yeah, bring it up, bring it down. The more people you stop out, the bigger the bonus you're going to get at the end of the year. Okay? So we don't want to trade against the minions. All right, so I just want to find a trade here. So we have a little bit of an unusual situation being that next week is a holiday. And so I'm really trying so hard not to take any options that expire July 5th. This is my options chain through my DOS Trader Pro platform. So if we were to break a button, I don't know, they don't have any 50-cent options. Oh yeah, they do for July 12th. Okay, this is more like it. So I'm not going to do anything this week because it's Wednesday. We really don't have too much time. But I would normally go to next week, but being that it's a short week, I prefer July 12th expiration. Now the monthlies are the third week of the month is July 19, and that's always a great week to go in. If we had massive prints that came in today, I would strangle using July 19 because monthly options have the most volume, and you'll find a lot better liquidity on those strikes. But if it's just a regular print, I mean, it's still big. This is still, I like it, okay? I would go to July 12th, which is what we're looking at right here. And I like to go 50 cents out. So if I thought this was buying, if we were above 27.06, 27.20, I buy the next level up, 27.50 calls. But it's not bullish. I'm not going to be buying these. But if it was, there's 17 cents. You can see that there's a lot of volume on them today. Yeah, it means somebody's there on the other side if you want to get out of them. You don't want to get into any options that have zero. Let me just go in. You see these with zero volume? You don't want to take those. You want to jump into ones that have volume in them. That's really key. That's on the long side. Now, if this was a massive print, then that's what I would use to strangle. I would go 27.50 and 26.50. Okay, 26.50. These are only 7 cents. Ooh, these are really cheap for July. No volume though. I actually, oh no, that's 25. I'm sorry, wrong one. My bad. 26.50 is 22 cents. I put my glasses on. Okay, these guys. And these are very similar to price of these guys if I was doing a strangle, which I'm not. Okay, so I like these 26.50 puts. In fact, I may put some of these on before the end of the day. So I start off going out in time. And again, why do I like that? We have some moving averages here. It'll most likely come down here though, bounce, and then go down. It's not going to be one fell swoop. I like to go from out of the money to at the money. But it doesn't mean that I'm going to wait for this option to become at the money. I'll get out before that. I'll take profit. Now, if it does start to move down, I could be more aggressive. So like tomorrow, yeah, these are really, maybe even next week is not great though. Pretend it's not a holiday, okay? I would normally go to these next week, 26.50s. We don't need that much time. But you can pay a little bit more and go to next week's, the week after. All right, so those are a couple options, but I do like to go 50 cents out of the money when it comes to these inexpensive stocks. So I'm going to punch up Bank of America, give you another example. And let's see on the daily chart. Yeah, I love this. Yeah, Bank of America is usually one of my faves. So if it closes weak on Bank of America, oh, let me switch to Bank of America. It usually moves a little bit faster. Bigger ATR. This week's, we don't have enough time, but if you wanted to, these are 9 cents. Yeah, if you really thought this was going down tomorrow, you have 2 days. These 27.50s are really nice. They're only 10 cents. If you want more time, I would suggest July 12th and going to, these guys are 37 cents, is a little bit more money, or the 27s. Since we already hit 27.50 once already, okay, we already came down. There were computers buying there. As you can see, they popped it up. There's going to be less computers buying there the second time, and that's why I would buy these 27s for cheaper, for 23 cents. I don't want to risk a lot. In my mind, how much could I risk? Not how much could I make? How much do I want to risk? Let's say it's buying. Some good news comes out. Bank of America gaps up. Well, guess what? I'm only going to lose 23 cents. That's it. All right. I call them lottery ticket trades. If you put on like 8 of these, all you need are 4 to work out really well, to do well. Usually it's much higher than that when you're following the dark pool. But what we do is we add more aggressively. So this is my first trade. But tomorrow I may day trade it. So tomorrow, if we go below 27.50, I'll buy these, or I may buy these 27.50s tonight into tomorrow. Or I may, again, it depends on what time of the day, where it's at. But I start out further and then I become more aggressive as a day trader. As a day trader, you could trade in the money if you want. That's more for day trading, but the ROI is best when you go from out of the money to at the money. And I never like to risk a lot. But with day trading, you're not risking it all. If you go in the money with your options, like let's say we bought these 28 puts. Okay, actually, these are not expensive. These are 28 cents right now. Or let's say 28.50s, because these are pricier. I want to kind of show you that example. I'm going to zoom in, okay? 64 cents. I highlighted it in blue. These are in the money. You don't let these go to zero. If Bank of America stock, say you shorted it by buying these puts and Bank of America started going up, well, you get out. The lottery tickets are more like if they go to zero, it's not a big deal. I don't always let them go to zero, but it's different. Okay, it's a different style of trading. Okay, just to kind of show you the different methods, but please paper trade, get to see how they decay. There's a lot of stuff, but you really have to learn how to trade first, okay? So that's generally what I like to do. Any questions before we end? Because I got to go do a meeting in the Java bit now. I'll take Microsoft. Yes, let's go to that. Okay, so I do have a lot of traders that will trade pre-market. Anybody here like to trade pre-market? See if there's anybody here. Yeah, I don't care about the news. I have no idea what's going on with China or interest rates. I just follow the bonds, Morningstar. Massive bond prints starting in April. Okay. Yeah, pre-market. Yeah, you should have access. If you don't have access to pre-market data, number one, then you're trading with a blindfold on. Okay, that's number one. You can see that you can just call your broker up and get access, or change your broker if your broker doesn't give you access. A lot of times what I'll do pre-market, when I was a stock trader, I used it a lot to get out of my swings. Now that I mostly trade options, I can't trade options pre-market because they're not open. But what I can do is, let's say I'm in SPY calls. I'm in the SPY 292 calls, let's just say, right? Overnight, we gap up from 290 to 292. Here's where I want to get out. I can't get out. The market's not open yet, and you're like freaking out. You're like, I want to get out. This is at my level. And you watch the SPY come down pre-market, and your profits are just like dwindling away. You can short the SPY and lock in your profits. Short the stock. I've done that quite a few times in my room. Locked in my profit, and I put my cover above 292, 292.20, so that if it does go up again, I'm out of my short and I'm making money on my options again. But so many times I've locked it in, I've made like $1 on the short. I still made some money on the options, but I was able to lock it in. So that's a really good strategy. Trading stocks pre-market, you can test the water out. I show you how to do that in boot camp. It's a whole other thing, but you should have access to it. Okay, so Microsoft, the trade isn't done yet. I'm bearish below 134. Yeah, so personally, I would not have taken this trade because it happened too early. The first 15 minutes, it went above 135. But legally, I have to put it down on my list that it was a trade that could have been taken. It hit 135.50. It did hit one target and then pulled back. Okay, so and then pulled back. After 11, you see why you don't want to trade with the minions? You see what it did here? 11 o'clock. All right, they took it above and they went up, down. It's almost as if they got my whisper and they're like, we're going to shake out everybody that's got Stephanie's whisper. Look at that. That only happens at 11 o'clock to 2. Then like the minions come back at 2 o'clock. You can day trade after 2 o'clock. I don't always suggest it, but there are days that we have a really nice trend after 2. But the best time is really in the morning. Watch the 134 level for this afternoon. Now, Microsoft, personally, I do not trade. I don't. It used to be my #1 stock to trade back in the 90s. Microsoft, Intel, Cisco. I love those stocks. I made a living on those stocks. And then what happened is I came back to trade after I had my kids in 2009. And I was like, oh, here's my favorite buddies, Microsoft and Intel. Woohoo, let's trade these guys. They were awful. I lost every single time. What the hell happened to this? These used to be like my go-to. The momentum, something happened. I don't know what it is, but I had a very tough time. I put them on my do not trade list, but I have traders in my room that love them. So I put them on my whisper, but just me personally, I just don't trade them. And then, you know, over the years, I tested it out again. Oh, let me just see if they're really that bad. John's making money on it. How could it be that bad? And of course, it shook me out again. So we all need a do not trade list. My do not trades could be very different than your do not trades. Trade what you like. This is where paper trading comes in. Formulate that list. Just because you love AMD, I'm not crazy about that one either, but if you love it, doesn't mean it's great every day. Only trade it when it fits criteria. I only trade it when it has prints. Okay. I love gold. I love the bank stocks. I love oil stocks. I love trading the SPY, the Russell, the Qs, the Dow. I do. I have my favorites, and then I have my not, like Qualcomm. There's a stock I own long term, but I can't trade it for the life of me short term. Just not good for me. So each person is going to have their own. I do not trade biotech stocks. Nope. I have seen traders get wiped out. Biotech. They're crazy nuts. They don't have like, I will call out Pfizer or Merck if they have prints. Teva, I've called out Lilly, but only trade options and only trade what you can afford to lose, because you never know if there's a drug out there, somebody's going to have a bad reaction. If something doesn't get approved, I'm not a doctor. I have no idea what's going on. Okay, I have no idea. So I don't trade them. I have traded options on Pfizer, but yeah, but generally no. I'll trade Verizon, AT&T. Love Coca-Cola. It's one of my favorites. I'll trade American Airlines. Okay, so Microsoft, if it closes below 130, yeah, that's going to be bearish. All right, on the whisper. Yep, you didn't miss it yet. They just splashed it up in the beginning of the day. We are below the 8. And we already tested. Here's my exponential 15, by the way. We tested it yesterday and pulled up. There'll be less buyers the second time around. So, okay. So Beyond doesn't have great options. Yeah, so I don't personally trade it. Yeah, I only trade stocks that have very liquid options. Yep. And it has a very big spread as well. It's not something I trade. I know other people out there do. So when it looks good in the morning, I'll put it on the whisper, but generally I don't trade it. Yep. The 15 EMA. Yeah, just go back in the tape because I got to go do another meeting. All right, guys. So, and girls, thank you so much for coming out today. I really hope that you learned a lot more than you knew before you entered this webinar. Watch it again. A lot of stuff in there. And I find repetition is really good. It is recorded. You will get the recording. Email me if you have any questions, if you want to join the boot camp. If you don't have the app, I highly suggest you get the app, test it out. Again, it's $19.99 a month. We have a new version coming out very soon. We're always making improvements on it. Yep. And great. Thank you guys. Really means a lot. I do my best to try to help you as much as possible. And if I can, I'll post, as much as I can on that app. My attention really is in the trading room. I am trading live. But again, it's great to have the app if you can't be in there. All right. Thank you very much. Take care, everybody. Have a great day.